The death of the dollar just died. Or in other words, the death of the dollar has been greatly over-exaggerated. If you take a look at this chart, it's the dollar index, the DXY, which is the dollar measured against a basket of other currencies. And you can see ever since April of 2025, when all the tariff stuff began, the dollar was kind of falling off a cliff, and it fell below a significant support level of right around 100 that it had held above all the way going back to April of 2022. And it has spent pretty much the entire time since then below this 100 level. However, from a technical analysis point of view, you may recognize this rounded bottom it put in, and it continued to test that old support level as new resistance until recently it finally broke back above. And in this video, I'm going to explain why I think it is headed all the way back to 110. In other words, the dollar compared to the basket of other currencies in DXY is about to get much, much stronger, which means that if you have positioned your portfolio in order to take advantage of the death of the dollar, of hyperinflation, of a replacement of the dollar, of de-dollarization around the globe, you may be positioned for some heavy losses and may need to consider some protective strategies to hedge against that. So what in the world caused this turnaround, and why do I think the dollar is going to continue to be headed much higher for the near future? In order to understand what's going on, we have to go all the way back to the creation of the Bretton Woods system in 1944. On the heels of World War II, the entire world was out of money. They had spent all their gold, and the entire world was basically destroyed from all of the war. The world needed to rebuild, and they had no money to do it. However, all of that money had just spent the last few years going to the United States. The United States was flush with gold. We had become a manufacturing powerhouse, specifically with weapons. And so the entire world met together at Bretton Woods to come up with the new global monetary system. And the one that they came up with was one where the rest of the world would keep their fiat currencies, but instead of having them redeemable or backed by gold, they would have them redeemable or backed by the US dollar. Because at the time, the US dollar was as good as gold because the US dollar was still redeemable around the world for gold. And the US could do that because we had all the gold. This put the US dollar in the position of being the global reserve currency, and it gave us an unfair advantage over the rest of the world. And for the next couple of decades, we printed way more dollars than we actually had the gold to back it up, which is why the system failed in 1971. The rest of the world caught wind, tried to redeem their dollars for gold. We didn't have enough, so we ended gold convertibility permanently.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculator. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Now, you heard that clip from Nixon correctly. They decided to suspend gold convertibility temporarily. But as Ronald Reagan liked to say, there's nothing as permanent as a temporary government program. And so the Bretton Woods system ended. However, the dollar was still being used around the world as the main form of currency. In order to make sure that the rest of the world continued to use the dollar, Henry Kissinger went to Saudi Arabia, and a pact was signed between the US and Saudi Arabia, where Saudi Arabia would sell its oil for US dollars. And when they got those US dollars from the sale of oil, they would turn around and buy US treasuries. And in return, we would offer lots of military presence and protection in the region. However, over the last couple of decades, that agreement about the way that the world works and the US being the military presence around the world for policing the world has gotten extremely expensive. And so the United States, as detailed in the unclassified Department of War 2026 National Defense Strategy, is pulling out the Bretton Woods playbook, the World War II playbook, because policymakers are aware that if things continue to go the way they went, the United States and the dollar would no longer maintain its place at the top of the pile around the world. They did not want to lose that position. I highly recommend you read this because it's only about 23 pages long, but you can see there are a few pillars of their effort. Number one, defend the U.S. homeland. This is the Western Hemisphere plan. So it's why we went into Venezuela. It's why there's talk about Cuba, why there's talk about Greenland, why we secure the Panama Canal. It's about taking control again of the Western Hemisphere. Pillars number 3 and 4 are related. to increase burden sharing of defense spending around the world with the U.S. allies and partners. Part of this is plunging the Eastern Hemisphere into war and chaos. This is one of the reasons why you've seen everything going on with Iran. And as they have to spend more money on their own defense and on rebuilding, where are they going to spend that money? In the United States, which is why pillar number 4 is to supercharge U.S. defense industrial base. And this is not just regular manufacturing or the regular industrial base. This is specifically the defense industrial base, meaning the United States is the arms dealer for the world. So hopefully you're putting the puzzle pieces together right now, why this is the World War II, why this is the Bretton Woods playbook all over again. The rest of the world goes into war, goes into chaos, spends a bunch of money, needs to be rebuilt. All of the money, all the spending comes back to the United States. But if you want to buy stuff from the United States, what do you need? You need dollars. US dollars. This is one of the reasons why the US dollar is getting much more valuable relative to other currencies recently and why it will continue to head higher. This administration has orchestrated a dollar shortage around the globe. In fact, last month, the World Bank document showed that 27 countries were seeking to ensure access to emergency crisis funds. And countries like the United Arab Emirates are discussing setting up currency swap lines with the United States because they need to get dollars. This is very similar to the U.S. financial support to Argentina, where U.S. Treasury Secretary Scott Bessent created a swap line through the Treasury to Argentina. As the Rothschilds like to say, give me control of a nation's currency and I care not who writes the laws. If you can control the money, you can control basically everything because everything is downstream of the money. And so if the United States wants to stay as the global superpower, which it seemingly does, the way to do that is to make sure everybody still has to use dollars. This is why the global reserve currency, being the dollar after World War II, launched the United States into that position of being the global superpower. And this is why in 1971, when that system ended, it was so imperative to get a new agreement out there that maintained the dollar as the global reserve currency, which is why Kissinger went over there and made the petrodollar agreement. And it's why right now, as that agreement was starting to fall by the wayside, and that was not working like it used to anymore, they're pulling out the World War II playbook again. Chaos, war, caused the world to have to spend a bunch of money on rebuilding, rearming, and the place that they're going to buy that stuff from is the United States, which means they must get dollars. This is a giant orchestrated dollar shortage. In my opinion, it is very likely that the dollar continues to head much higher as the rest of the world is scrambling for dollars that they need. And all of that purchasing is coming right back to the United States. And this view is now starting to hit Wall Street, especially with new Kevin Warsh at the helm at the Federal Reserve. Banks like Chase and Bank of America and Goldman Sachs are saying that the Fed has now activated the dollar bullish outlook. Now, they're claiming this has a lot to do with American exceptionalism as well that will support U.S. assets, but that American exceptionalism is orchestrated by everything that you've been seeing happen and play out over the last year and a half, which is why the U.S. economy has remained so resilient compared to the rest of the world. Wealth fleeing America, hedging the downfall of the empire of the United States, global de-dollarization, and the debasement trade, I think, are over. And if you are playing that game, you are playing by the rules of a game that changed once the administration changed. This is not investment advice, and I understand that it may be difficult to consider that this might be true, considering everything, the direction that everything has been going for the past 5 to 10 years. But good investors don't invest for what they think should be happening. They invest for what they see actually happening, regardless of whether they want that to happen or not. Well-researched, strong opinions, loosely held so that you can change your opinion when the facts change, when the data changes. And as of recently, it looks like the new reality is different than many people expected it would be. As always, thank you so much for watching. Have a great day.